This podcast is brought to you by Turncast. We make game-changing podcasts for fintech and financial services companies. Learn more at turncast.com.
Hey everybody, welcome to Connected. I am super excited today to be joined by not only a good friend, but somebody who I think is one of the more impressive people in the industry, Brad Johnson, who is a principal and co-founder at Triad Partners. He's also the host of a podcast called Do Business, Do Life, one of my personal favorites that he just launched a couple of months ago. Brad, welcome to the show.
What's up, Kyle? Glad to be here.
Absolutely, man. Thanks for coming on. So, Brad, I gave a little bit of an introduction there, but for those who don't know who you are, give us the introduction to Brad Johnson.
All right, I'll try to make it short and sweet. I was a IT major in college that got my first job at Payless Shoe Source, and the now infamous Payless Shoe Source because it's no longer in business, but worked at their corporate office, and I was there a few years, and it wasn't for me. It was a great company, great people, but I don't know if the world of finance drew me to it. I just remember being in a cubicle at Payless, like researching Google was IPOing, Chipotle was IPOing, Under Armour was IPOing, and I was like doing all this diligent research to get in, and so I'd always just been interested in the stock market, and then I was studying for my CFP remotely through Kansas State University, and so basically, I was all set I'd convinced my wife that I was going to go be a financial advisor. I'd interviewed with the usual suspects at that time, Ameriprise, Ed Jones, John Hancock, and I was just getting ready to take a job and move our family to Kansas City, just a bigger market. My wife at the time was a school teacher in Topeka, Kansas. About that time, I got a call from a buddy named Sean, who's actually now a partner at Triad Partners, and that was really my intro into the world of more what I would call insurance brokerage. Started with the company right down the road, Advisors Excel, and that was an incredible run. He was one of the early guys there. I was one of the early guys there, and saw it go from basically a company no one had ever heard of to one of the largest players in the space, from a handful of team members to north of 1,000 probably now. And so that was really my entry into finance, and cold calling financial advisors, 100 dials a day, the standard, how I think a lot of people got into this space, just grinding. I was very fortunate because I had the opportunity to just grow up in finance next to some of the top independent financial advisors from the space. So just tried to be a student, learn as much as I could, ask a lot of questions, and that's really the semi-short version to how I got to Triad today.
Yeah, and we're going to get into a lot of those things, so I appreciate you sharing that. So this show's called Connected, and it's all about building better connections, whether that's with technology or other people. And Brad, I've known you for a while, and I have seen this with my own two eyes, but you are personally great at connecting with others. And you've spent time with hundreds of elite advisors, coaching them, talking to them, being around them at events. So one of the questions I love to ask guests is, what advice would you give to the person listening to this that wants to build great connections or even better connections than they currently are?
Such a simple question, Kyle, and there's so many ways I could go with this, but I think if I was going to narrow it down to just the core that I've had success with, don't make it about you. Or in this instance, don't make it about me. There's all kinds of books out there. Some of my favorites, one of my favorites of all time, How to Win Friends and Influence People. I feel like it's the combination of reading books like that, and then also growing up small town Kansas, Midwest, Minneapolis, Kansas. It's a town of 2,000 people. It exists. It's out there. If you're listening in, most people are like, how'd you get to Kansas? I'm like, well, it's easy. You're born here. That's how people get here. But on that note, I remember as a kid, it was just wired into me to treat others as I'd want to be treated, because the truth is, everybody goes through their formative years of kind of being a jerk, maybe in the junior high school area. I feel like small town Kansas kind of is the kryptonite for that, because your parents, your grandparents, if you're being a jerk in town, they know about it by the time you get home, and they're going to address it, right? So I feel like that was a little something that I was fortunate to grow up with, that small Kansas mentality, where it's been hardwired into me from the early days of treat others as you want to be treated. And I think the natural evolution of that going into a relationship business, which is finance, which is podcasting. You know, if you truly think about connecting, that's what we're doing right now, Kyle. We're having a conversation that we hope can serve others. There's a story in How to Win Friends and Influence People, and it's Dale Carnegie, the author, talking about how him and his wife went to a dinner party, and he had the most amazing time. And his wife's like, really? Tell me about it. And the host of the dinner party was some attorney or lawyer, and all he did was ask Dale Carnegie about himself for 60 minutes. So the punchline of that story is like the guy just asked him about himself, and he talked about himself for like an hour straight and had the best time of his life. It's everybody's favorite subject matter, right? It's themselves. And so I think just in business, if you start with the end in mind, whether it's a podcast, how do I serve the listener? Whether it's your business model, how do I serve the end client first? It's kind of the Zig Ziglar, if you help enough other people get what they want, you'll get what you want in life. And so I've just found in connections, that's how it works. Like if you serve others, people are like, man, that Kyle Van Pelt's a pretty good dude. And then they start talking about you when you're not around, which leads to intros, connections, business opportunities, all of the above.
I love that. I love that. So I want to go maybe a layer deeper or add some depth to this question. So I think that is incredible advice if you've got a lot of time with somebody. But for a lot of the listeners of this show would be financial advisors, and they are getting a new prospect in the door, and they want to know, how do I connect with this person quickly? I might not have an entire dinner party, but I want them to feel comfortable with me so that I have a better shot of winning their business. Any quick tips off the top of your head of how to quickly build rapport and connection with a prospect if you're a financial advisor?
Yeah, one of my friends, actually Anthony up in Chicago, he's been on my show, was a few episodes back. His quote that I love to borrow is, how do you put a scratch in their record? We've all seen that TV show scene where the DJ scratches the record and everybody looks over. And I think oftentimes in finance, what I've seen from experience when advisors are like, man, there's people coming in the front door, but I'm just really struggling. They say like, oh, you sound like my advisor I already work with. What's the difference? Or they get a lot of, I want to think about it. I think oftentimes it's because we are in a world of numbers and spreadsheets, and it's really easy. In fact, sometimes I feel like it's a little bit of a defense mechanism for advisors. It's like, if I go into the spreadsheet, I know how that works. Where human relationships, guess what? It takes a little bit of feeling out. Let me understand this person. Let me ask them questions. How do they tick differently than, the last prospect or client that came in and sat down with me? And so a few thoughts is ask questions. Don't make assumptions. Don't treat everybody the same, because specifically our clientele works with a lot of retirees, and I know every retirement story, those are different. Some people want to go check off bucket list trips. Some people are homebodies and want to finish the backyard. Some people want to make sure they're at every grandkid's sports game. And so until you understand that as an advisor, it doesn't really matter what financial plan, because that's like the variables and the logistics. I would say go to the other side of the equal sign, start with the end in mind, figure out what is a perfect retirement for them. And that's experiential. And that's a lot more emotional than it is black and white numbers and math. And so that's where, if you ask great questions and great follow-up questions, just like you just did a second ago, you kind of are able to peel back the onion, and that's where connections start. Because if I know this 65-year-old couple, the most important thing in the world to them is always show up at 12-year-old granddaughter's softball game, now I can build a financial plan that helps make that happen, even if they're a few states away, right? I think that's the core of connection, is understanding first. You really have to seek to understand.
Oh, I love that. I think that's amazing. I think the gist of what I heard a lot of that there is, how do you move beyond the numbers and the spreadsheets into the emotions? Because I think one common thing that we hear with a lot of the advisors and folks we talk to is people coming in the door might be coming in with the financial problem, or they're nervous or they're anxious about, am I going to be okay? Are we going to be successful in retirement? Are we going to have enough money? All of these what if questions. And the great ones are the ones who flip those questions into dreams and goals, and you change those sort of negative or anxious emotions into really positive emotions. And then you start to build the plans from there. So I love that answer. I love that response. This start with the end in mind. It seems to be relevant for so much in life. Staying on the theme of connections and going a little bit deeper, I have been impressed as I've looked at your career over time. You've built a network of incredible people. And I think it's safe to say that that's certainly been a big factor in your success this far. But my question revolves around, I think a lot of people, especially in our industry, have the opportunity to meet quote unquote high status people or people who a lot would love to have in their network. But you've had the privilege of not only meeting them, but you now call some of them friends, and they're sort of a part of your network, and it went beyond just that initial meeting. So my question is, what do you think it takes to not only just meet those people, be in the rooms with those people, but build connections that lead to them truly becoming a part of your network and having sort of long-lasting friendships?
So Kyle, I love this question. What I love about finance is there is almost unlimited opportunity to get in the right rooms. We've been to a number of conferences. I think we were just talking about what's your go-to conference, what's my go-to conference. If you look at that when it comes to relationships and connections, that's like a first date. I can think of a number of conferences where I'm like, wow, I really enjoyed that conversation, but that's basically where it stops. Where it's like, oh yeah, who was that random dude or that random girl that I talked to 3 years ago at that random conference? Same with the podcast. So think of those like stages. And stages can be physical in person, like a conference, like Jolt that I was just out in Vegas, or they can be virtual like this one. Right now we have a virtual stage. Kyle and Brad are sharing it right now. So for me, it's what happens afterwards. And so what I try to go back to kind of the previous conversation, if you start to understand what makes Kyle Van Pelt tick, I know you're a family man. I know you have kids. I know you care about those kids. I know you have a wife. You care about your wife. And one of the things I always try to do when you came on my podcast, prime example, you were gifting me your most precious resource, which is your time. That's a finite thing. We all have an equal amount of that, regardless of the money in the bank account. So don't take the gift of time for granted from anyone. You gifted your time to hop on my show to share thoughts on just your perspective. You've been right in the mix of it, this evolution of the finance world and technology and where it all comes together. You then share that with my audience, who I want to make sure every guest that I have come on my show, I bring a high caliber guest, a great human, somebody that's focused on a different area that can serve them, right? So I'm starting with my end in mind. So back to my own advice, what's on the other side of the equal sign? For me, the Do Business, Do Life podcast audience, that's who I'm trying to serve. So who are the variables? Bring Kyle on. Okay, now you came on, now what's my follow-up? I've always, and this is maybe John Ruhlin's influence, giftology, I've always tried to show gratitude to everyone in life that maybe I want to make sure I deepen that relationship, that connection. And so I've had a number of New York Times bestsellers, just very successful business people, keynote speakers that charge 100, 150, 200K for an hour of their time. They go on everybody else's podcast, and sometimes they're lucky if they get a follow-up email like, hey, your episode's live. And they've told me this. And in turn, I send a handwritten note, a nice gift, and typically I include the whole crew if they've got a family in that, so that it benefits everybody, those that they love as well. And then I also try to, when I start to understand their business, make referrals. Hey, have you ever connected with such and such? And on the episode I just did with John Ruhlin, we actually got deep into this because I learned from him how to make a great introduction. And that's a double opt-in where both parties agree to it, and then you connect them in a meaningful, more than just a random, hey, meet Kyle sort of way. So I think I'm going a little deep on this one, but I think the biggest thing is don't make it a one and done first date. If it's somebody that you want to connect with, send that follow-up text, send that follow-up gift. Oftentimes you meet so many people at a conference, like I will literally take a selfie picture with them and then text the number so we're both connected and we both remember, oh yeah, that was that conversation. So there's lots of little things that I've just learned from some other friends that are master networkers and connectors over the years. But I think the biggest thing is don't let it just be a first date, continue the conversation and continue to add value and show gratitude to them.
Yeah. I want to talk a little bit about the adding value thing, because if you read books on networking, like one of my favorites is Never Eat Alone, or there's other books like this. everybody talks about, hey, for high status people, you have to add value because everybody's always asking and asking and asking for them. But I think a lot of people, and I know I used to struggle with this a lot, get hung up on what does add value look like to somebody who seemingly doesn't need anything from you. And it could be really small things, sending articles or things like that. But I kind of want to, maybe twofold question is, how would you define value in that scenario to a higher value person potentially? And is it, I guess psychologically, is it as overwhelming as a lot of people think, or do most people just want to, to truly build connection? And maybe some of those people don't even think of themselves as high status as we might think of them as.
So I think the first thing, Kyle, to add value, you have to be more valuable over time. If I look back to my personal growth journey, I mean, the truth is I was a small town Kansas kid, was not some Ivy League school kid, and sports was kind of that avenue into college for me, college football. And then from there, when I got into the world of finance, as many what I would call sales-driven organizations are, it becomes about personal growth. Because, if you're going to cold call, it's like, wait, how do I do that? I should read a book on it. And so one of the sayings we have in my house is readers are leaders. And because of that, because I look at what are core themes, the most successful people in life, they tend to be common attributes. And one of those things is almost every super successful person I've ever crossed paths with, they're typically well-read. Not all of them, but most are well-read. And sometimes that's an Audible book. They might just listen on their commute, all of that. I think the biggest thing is look at yourself as your biggest investment you can make. And The Richest Man in Babylon, which was a book I read early in my personal growth, that says take 10% of what you make and invest it back into yourself. That's when I started paying for masterminds. That's how I originally got connected with Michael Hyatt in a group of 12, 14 entrepreneurs, which if I look, that was why my podcast came to exist, because I took a problem. I can't get a bunch of successful financial advisors all together for a call. And the solution was, hey, turn that into a podcast. Then honestly, if it wasn't for that podcast, I don't know that this conversation would be happening right now, Kyle. And so it's kind of these butterfly effect decisions you make in life. And for me, you can shortcut some of that because every mentor almost in the world is available free at your library in a book. If you want the in-person connection with people still living, you can typically, if you're willing to invest out of your own pocket, pay to be in the right rooms. And so you can kind of shortcut and accelerate those learning curves. And that's what I would recommend is, as long as your personal knowledge, you're investing in that and growing that, while at the same time getting in the right rooms. The truth is, a guy like, let's use Michael Hyatt, he wants to be a great dad. He wants to be a great grandfather. If I share something like, hey, the family board meeting that I've shared with a number of people, with him, that adds value. And that's a completely different domain than business, right? So you can add value in so many ways. Personal health, working out, like whatever your interests are, odds are if you've leveled up enough in that area of your life, it can add value to others. And honestly, don't listen to that little voice inside of our heads that we all have of like the imposter syndrome. The way I look at it is we're all humans. And if this is something that adds value to a number of humans, it will probably add value to just about anybody if it's the right domain. So that's personally how I view it. That might be a little different than others, but that's worked pretty well for me.
No, that's amazing because, I had never heard of the family board meeting until you shared it with me when we were hanging out one time. And it's great. So for the audience that hasn't heard of this, you should check it out. It's a book called The Family Board Meeting. I'd also encourage you to go listen to the episode that Brad did with the author on his podcast, Do Business, Do Life. We'll link that up in the show notes here. Excellent concept. And the reason I bring that up is you can almost build like a value toolbox in some ways, because you could share that family board meeting over and over and over again. And maybe you're sharing it a lot as Brad Johnson, but the person receiving it, that's the first time maybe they've ever heard about it. And so I think there's a lot of these things in life where we do things over and over again, but it's the first time somebody else has heard of it. So it's, family board meeting, which I know added great value to my life. And you've shared that with a lot of people, whether it's health or fitness or whatever it is. Find that common ground, go to your value toolbox and pull it out and go, oh, you like these things. Have you heard this? And that's a great way of creating value. So I love that. That's a great answer, man.
Well, and the thing is, like, if you look at life, of, hey, there's these other people that I want to add value to, no different than you want to add value to those that you love in your life, your family. This is completely corny, but this is the way you connect with people. So back in the day, when everybody in my space was cold calling, just 100 dials a day, pick up the phone. I remember I was trying to recruit Ron Carson as a client. So I'd read his book, Tested in the Trenches. Obviously, at the time, he was one of LPL's largest producers. I was in the fixed insurance business, so I didn't even know if he did that business line or not. But he was kind of one of the godfathers in the space of just, wow, this is a guy that's doing big things and kind of on the front edge of where finance is going. So rather than just, well, by the way, I did try to cold call him for about a year, and how'd that work? About 5 gatekeepers, constantly stiff-arming me. So then I read somewhere in an article or a book that he loved red wine. He was a pilot, flew himself, and he was a Nebraska farm kid. I was a Kansas farm kid. So how I connected with Ron was I sent him, back in the day before drones, it was like, you can't see this on video, but basically my arm's length, it was those remote control helicopters, back when those were a thing on Amazon. And so I got like a big one. It was probably $50, $75 remote control helicopter. I mailed it to him with a handwritten note that basically said, from one farm kid to another, I know you're a pilot, now you can be one without having to leave your living room. And Ron, I remember I was sitting at my cubicle and the phone rings and it's Ron Carson calling me back just saying, dude, that was creative, thanks, I've never seen anything like that. Then he asked me about myself, like, okay, what do you do? Like, what company do you work for again? And so you can get creative, like, why not? Have fun. That's how you show up differently. You don't have to do some templated blanket newsletter that you send to everybody. And the more you know about people, the more you know what makes them tick, which means then you can do special, cool things to connect on a different level. So I feel like we've just turned this into 100% the connection podcast, Kyle.
That's okay.
But that's probably the way I'm wired. So
yeah, but that's
I hope this is helpful.
Yeah, that's what it's for. And we're gonna segue into industry here in a second, but I'd be remiss if I didn't ask you about this one other thing when it comes to connecting with people. So when I was on your show and I had the privilege of being there, we talked about building an 11-star experience technology-wise. But I want to flip the script. So from everything I've seen at Triad and had the privilege of attending a couple of events, or you call them experiences, I mean, you guys build epic experiences for the people who affiliate with you. And I know this isn't all Brad, a lot of it's your team, but I kind of there's a lot of people listening to this who do client events, who do all kinds of different things. As a form of building connection, how do you guys get deep enough to really make it different? Because I think every event has sort of the same elements, right? You're gonna have people show up, you're gonna have networking, you're gonna have a meal, you're gonna have these things, but you always elevate it. So I'd love to just kind of hand you the mic on how do we build connections through great experiences and in-person events?
I believe it starts with the intention first and understanding, I'm just going to go back to starting with the end in mind, understanding who is it attending, and we call them experiences versus events, and here's why. Words matter, and we want to set the intention right out of the gates, what we want this to be. So at Triad, we call them Triad bad words. We do experiences, we don't do events. Experiences create lifelong memories. Events blend into one another because everybody's been to hundreds of events in their lifetime. And so if we're going to create lifetime memories, you have to start with the intention of who's going to be there. Our Founders Retreat is coming up in just a couple weeks. In fact, I just did a meeting this morning on it. Our Founders Retreat is for founders, for their significant others. And then we believe entrepreneurs, which is independent advisors at their core, we believe they should decide what does a world-class experience look like for them. So for some, that's just a business retreat where, hey, I'm just going to come solo, leaving the spouse, significant other at home. For others, it's, hey, I want my significant other there. We're doing it in Lake Tahoe. This is going to be an incredible experience. I want him or her there. For others, myself included, Sean included, we're bringing our whole family. So it'll be Brad, Sarah, and the 3 kids, age 13 to age 7. So if I now know this is the mix of the people in the room, now how do I retrofit the experience to check the boxes for all of those individuals? A few examples. Selfishly, I read Way of the Warrior Kid a number of years back with my kids, Jocko Willink. He talks about doing jujitsu with your kids. That's been on the Johnson list of things I want to learn with my kids, right? So I'm starting as a student just like they are. So we're bringing in Henry Gracie into Lake Tahoe, and he's going to be doing morning jiu-jitsu lessons, some kids only, some adults only, and can do it all together. So we're bringing in access is another keyword for experiences. Keynotes are all well and good, and I've learned a lot from keynotes, but the way a keynote works at an event is said speaker walks on stage, get their little intro, kills it for an hour, while everybody in the audience scribbles down as many notes as they can, and then they disappear in the green room, never to be seen again. Well, the way we look at our lineup, I don't even call them speakers because they're literally a part of the experience. So Henry Gracie will be there the whole time. So he will be interacting, he will be hanging out. Jason Khalipa, former CrossFit Games champion. He will be leading morning workouts. He will also be there with his entire family. Chris Smith of the Campfire Effect. He'll be there with his wife, Melissa, and their 5 kids. So just like Access, we want to create a different version of that where our strategic partners are part of the experience, doing the experience with our members versus this separation of here's the person on stage, they disappear, you have to buy some course or mastermind group or something to be a part of that. And so that's been one of the biggest things is we just want to separate this like glass wall that for some reason gets put up at a lot of events. And we want to integrate the experience for access. Because what I've found in life is all of the breakthroughs come when you go deeper instead of shallow where it's like, oh, that was a cool 1-hour keynote that I forgot half of. The great breakthroughs happen over a dinner table, over a cocktail, to where people are just going deeper and just where you've got more time to kind of go to that level. So that's a bit of how we've thought about it.
I think that's the mic drop moment so far in this episode is, all of the breakthroughs come when you go deeper, whether it's building connections for your network, whether it's trying to create connections with new prospects. I think that's really the one-liner that encompasses all of it is, are you willing to be vulnerable enough to go deeper with people and not just ask the same questions or provide the same experience that everybody's going to provide? And I think one thing that I would add to what you're saying is you aren't afraid to do things differently, whereas you kind of take risks. And if some people don't like it, so what? I mean, this is what we're aiming to do. So that's really great, man. I appreciate you sharing that.
Kyle, just a couple other thoughts, because we look at it from, we call them triad members. That's another bad word. We don't say advisors or agents here. We say members because we want this to feel a lot more like a high-end country club or a high-end mastermind that's curated. And the truth is we don't want to let everybody in because we want to maintain a certain curation of the group around being growth-minded, being people we want to do business and do life with. But for example, because we know a lot of kids are going to be there, our check-in table experience is completely different. Back to the 11 start. There's literally like a little pop-up store with all the stuff kids like. The pop heads, I forget, Nash came up. I asked my son, I'm like, what would be cool for kids? And he's like, what about little mini Legos boxes that kids can pick? And I was like, cool, let's do that. So looking at it through the kids' lens, like last year we had a video game trailer that kids were in there. And actually one of my clients, Keith, was in there. I was like, Keith, how old are you again? This is for the kids. So like that, but then also I view our partners on most people would call them vendors. I call them partners. So for example, we'll have a number of insurance carriers represented out there. Guess what? Insurance carriers want the same thing. They just want to connect and create relationships. And every other conference they go to, they've got to work a booth and they've got to be in this expo hall and handing out brochures. And guess what? They hate it as much as anybody. And so we have a rule. We're like, no booths allowed at Triad Experiences. Just be a part of it. Come grab dinner and be a part of the community because we believe that's where all the best business relationships are formed. It's not over a booth handing out some random brochure to the person that walks by. So we've also tried to incorporate that from the vendor, what most people would, I guess, title vendor side as well.
I love it. Well, Andy just provided me a perfect segue. So I have absolutely loved this conversation about how we connect better with people, but I also want to talk a little bit about insurance. So you're a co-founder and principal at Triad Partners, which in my opinion is changing the game for providing insurance solutions on behalf of advisors or members in your case. I'd love for you to drop some knowledge on what's going on in the insurance industry right now. Because I think, and I know you and I have talked about this offline before, a lot of financial advisors wrote off insurance in many cases as a quote unquote bad word long ago, and they haven't really revisited the topic ever since. And part of this conversation has been about personal growth, lifelong learning, and I think so much has changed in the insurance industry over the past handful of years. So, I want to start by just saying, okay, Brad, blank canvas, fresh mind, how should advisors be thinking about insurance in their practice right now?
I think sometimes on this stuff, Kyle, you have to do a little history lesson, and it's how did we arrive to this point? And I think until you understand that, it's hard to say, okay, well, why do we do things the way we do them today? And the truth is, most of finance, from my experience, and this is regardless of whether it's on the security side or on the insurance side, was created as distribution. Product was made to be distributed. So if you look at how like the New York Stock Exchange came to be, back in the day, people had little paper slips that represented a percentage or a piece of a company. And they were saying, here's why you should buy this piece of this company for this price, higher or lower or whatever. And that was back in the day a stockbroker, right? Well, what were they really doing? They were selling shares of a company as a stock. And that was a lot more selling than it was building a financial plan, right? It was like, boom, buy this. Okay, so it was bartering basically over pieces of company. Well, look at insurance. A lot of people don't know about the FMO space, IMO, NMO. All of those are the same acronym. Field Marketing Organization, National Marketing Organization, Independent Marketing Organization. Well, the truth is, how did an FMO come to be? In 1995, a certain sort of a fixed annuity was created called an indexed annuity. Allianz was one of the insurance carriers. The individual insurance agents were out in the field, so they needed an organization to market insurance products to the field. Not too different than a stockbroker, right? Hence a BD, broker dealer, same thing on that side of the house. And so back then, everybody was selling products and saying, hey, person, individual, whether it was an insurance agent or a financial advisor or a Series 7, Series 6, whatever the licensing was required, go sell this thing to people, and here's how to sell it. And so now we arrive at today, and what I feel like is happening, it's this creative destruction. Look at the story of, it's been way overused, but it'll help for the Kodak was actually the company that invented the digital camera. Well, then they just sat on it and then it ate them alive later on. So as a financial advisor, don't be Kodak, right? And if we see this evolution happening, which is what was two separate worlds, the insurance world, the securities world, what I've seen happen, I got in this business in 2007 when I was 26 years old. Now we're 2023, it's all merging. And it's either merged or it's like kind of this like jammed together ugly mess, depending on what distribution group you're in, right? But go back, start with the end in mind. Who are we actually trying to serve? Well, start with your clients. And for our distribution at Triad Partners, our advisors are independent members out there. They're typically serving a pre-retiree and retiree class. There are certain guarantees that segment of the world, because guess what? They went from working the accumulation years to distribution. Now I have a nest egg. So where a lot of our Triad members are just thriving is that transition from accumulation to distribution. The United States of America, thanks to ERISA back in the 70s, did away with kind of the pension that most companies did back in the day. And now we've got these 401ks that, yeah, they've got $1 million, $2 million, $3 million, $4 million in them, but it went from a done-for-you model to a do-it-yourself model. And so back to your question, if you're an advisor out there, and if you're truly, I think there's also been a blend where fiduciary gets confused with fee only. Those are two different terms, and I think in our industry what happens a lot is terms are weaponized for marketing. But if you look at fiduciary, that by itself, of which I think pretty much, well, as a Series 65, legally you need to operate under that. Fiduciary to me means giving your clients access to as many financial tools as possible in your financial toolbox. And then if you're going to be a fiduciary, legally, it's do what's in the best interest of your client legally. Well, to me, it's hard to be a fiduciary if you have eliminated full sections out of your financial toolbox. So I know I've had the conversation with a lot of fee-only guys. Oh, I'll just refer it down the street. We all know if $1 million prospect walks through the door, I've seen probably on one hand in a decade and a half in this space, somebody ever referring that person down the street to somebody else. So for me, it's really figuring out what is that product suite, what are the tools, and making sure for your clients, for your prospects, that you've got all of the best-in-class tools in there to serve them. And that's on all sides of the fence. That's AUM, that's insurance, whether it's life insurance, annuities for income planning. A lot of our Triad members, they would just simply say, hey, I've got access to all of these tools when it comes to fixed income and retirement. Let's hand select which one's the best choice for you. It's getting out of a selling conversation into an actual holistic goal-based planning scenario, of which then you're just analyzing the said tools that get the job done most efficiently. And I think, I'll get off my soapbox here, Kyle, but I think most advisors, if you look at fiduciary through that lens of just have as many tools as possible and then do my best job to pick the best tool to accomplish the job most efficiently, I've never had an advisor argue that logic with me. And that's my argument to making sure there is something where you're checking that box for the clients that need it, whether it's a strategic partnership, referral relationship, if you are a fee-only guy, or potentially expanding the offerings for your client base, but just making sure you've got the best-in-class tools to solve the need at the end of the day.
I love it. I love it. And then, okay, so prefacing that, we talked about how much I think things have changed in the insurance space. I mean, the invention of fee-only insurance products that we've seen a lot of people come out with now to, outsourced fee-only partners like a DPL financial or things like that. Where do you see things heading in the insurance industry? What's kind of the future of what's coming down the pipe with all of these partners and why it may be an even better tool in the fiduciary toolbox headed forward?
The insurance side is really led by country demographics. It's the best way to put it. So I've been on the fixed insurance side since March of 2007 was when I started in this space. There's two things that have really, I don't know what the market share was at the time when I got in, but I believe it went from like a 20, 30 billion industry to it's approaching almost 100 billion now. And that's in like a decade and a half. So the demand and the need is there, but a lot of it is just the aging baby boomer population as you have this massive wave of the boomers that were born, in the 50s, 46 to 54, I think, or something like that. And so now it's my parents, they're in their young 70s, hitting retirement. And so I think the demand is based on some sort of products with some security or some sort of guarantees, which is why insurance products are designed in the first place. It's a pooling of risk, the law of large numbers, to create certain guarantees for a population of people. And so on that front, I just think there's a lot of opportunity there. And now we're starting to see, so when I was cold calling back in 2007, if I talked to a Series 65 guy or a Series 7 guy, it was almost like dial tone, right? We're building out our RIA right now. We brought on some world-class talent from a number of the large RIAs right down the road in Kansas City. But these are groups with 100 billion plus under their umbrella. And here's real-world stats. One of those groups that I don't know how many hundreds of million of revenue they generate annually, their insurance revenue was less, it was like around a few million. So if you look at the discrepancy there, some of the largest RIAs in the world, let alone the US, here's their revenue off of securities AUM fee-based business, and their insurance is almost non-existent. So that shows you just such a gap there. And Kyle, this is where you guys, I know at Mile Marker, have really dipped your toe in the water. Oftentimes that happens because the technology doesn't talk to each other very well. And so one of the things we're looking at Triad is how do we continue to make that one planning conversation versus these disjointed, hey, I talked to the securities desk over here, the life insurance desk over here, the annuity desk over here. Because the truth is, until you fix that, most advisors, it's going to be so painful to actually do holistic planning in all of those worlds. They'll be like, man, I'd love to, but I just can't even figure out how to get these two systems to talk to each other. So that's one of the places we're focusing because we know the end consumer, the truth is, they don't really care. They want a world-class financial plan that addresses their goals where they can sleep well at night at the end of the day. And the problem is a lot of the technology, a lot of the systems are so disjointed. The advisors that do want to do that, it's painful to try to actually fulfill that need. So I think there's a number of things, but as we look forward, the technology is continuing to talk and work better and better because there's companies like us and yours that are investing heavily in that. And so I think those on the front edge of that, the ones that make it easiest, are going to start winning a ton of business, and then probably that trend will speed up and that evolution will continue down that path.
I love it. Yeah, I'd be remiss without saying I'm amazed at how many prospects are coming in our door right now looking for ways to combine insurance data with equity data, because it's just so much focus on the technology evolution was on ETFs, mutual funds, all of those sort of things. And because all of the financial industry's business was done on an account by account basis, insurance was over here, equities were over here, alternatives were over here. But now that everybody's working off of the household model, they want everything centralized under one idea. We're almost having to re-architect how the industry works from a data perspective, which is really fascinating. So I think you're right. I think the firms that we see that are growing the fastest are what I would call full service firms. They're not trying to say this is the one thing we do that's not differentiated enough anymore. And they want to be able to offer a wide range of everything to make sure you're serving what the client needs. And then the last thing I'd say is, it's interesting when you said, the client doesn't care about what that product might be or whatever it is. I kind of equate that to, when a plumber comes in to put stuff in your house, you're not going, well, what brand of PVC pipe are you using to put into the house? It's like, I just want the plumbing to be correct. And with the end in mind, I want this to work properly, make sure my water bill stays right, and that we're going to have a safe house and it's not going to bust and leak all over the place and give me a huge insurance claim.
Yeah. What creates anxiety is uncertainty.
Yes.
And what I've seen a lot of, because back to how did the world of finance, personal financial planning, I should say, how did that come to be? Well, most of it started with the stockbroker that was selling stocks. Then it went to the life insurance agent that was knocking on your door, selling you a life insurance policy when you bought your first home. And so it's been a sales distribution network that, regardless of equities or insurance, that most people have, it's really the religion of whatever financial church that individual advisor grew up in. Well, now fast forward, what has that created for a retiree? It's created a kitchen junk drawer of an experience when it comes to their financial plan, because they've got the life insurance policy they bought when they first got married. Then they've got the kids' life insurance policies. Then they've got, oh, here's my old company's 401k. Then it's like, oh yeah, and I was told to start a Roth IRA, so that's over here. And so there's like statements, right? This like slammed into a drawer. The financial advisors that win long-term will be the ones that most intuitively take that kitchen junk drawer experience that most clients currently have, or like, I haven't even started the kitchen junk drawer experience because I was too busy like paying for kids' college or whatever, and create an intuitive, technology-friendly, minimalistic experience where it's organized and it's like, oh, all your boxes are checked. And yes, you can take that family trip once a year for $10,000 because we've already allocated a bucket for family trip experiences. And there's pieces of that I've seen that different companies are starting to fix, but until there's an intuitive experience, that's why so many of our firms use eMoney, because they at least had like a portal that was kind of like a tidy little place, electronic friendly, a vault that people could put it. But even that has its disjointedness of, well, insurance doesn't work that great in there currently. So there's little technologies that have gotten pieces of that right. But I believe, Kyle, long-term, which it's great business that you're in, long-term, the ones that, look at Amazon. It started out selling books, and now the user experience is so easy and friendly. They could be charging me $5 more a book, but I can just tap one time and it shows up at my house a day later. So I'm going to pay for the convenience. So how do you create that 11-star, super intuitive, easy experience for your financial planning clients? Those will be the companies that win long-term.
I love it. All right. I know we're getting close to time here, but I've just got a couple more questions that I'd love to get your insights on. I loved the story from your most recent podcast interview with Anthony from Goldstone about how your relationship started. It started with a sales call. At Mile Marker, we care about helping firms grow and supercharge their growth. And I believe the core of all growth is sales. So when I heard that story on your podcast, I loved it. I would love for you to share a little bit about what do you think advisors are missing about sales, or what are they getting wrong? Because I think that is something that if everybody gets better at it, their business is going to be better, their life's going to be better, all of that sort of stuff.
I love that you love sales, Kyle, and I believe it has a bad rap because everybody's unfortunately had a bad sales experience in their life, whether it was the used car lot or wherever that happened for you, the unsolicited telemarketer on your cell phone. Sales, to me, how I define it, is to transfer of belief. I believe to have belief, you have to have conviction. And where I've seen the disconnect oftentimes, and it's typically early on, it's young advisors. I remember when I got into this business, I was reading a script that, if I'm honest with myself, I didn't truly believe it. It was just words on a piece of paper that would get this prospect from a prospect to a client. And it was something that, I borrowed from somebody else. So I believe at the advisor level, to be convicted and have a belief in what you're selling, you actually have to do the work to build something that serves people. Now, that could be, I know most of our triad members, they're doing a CFP level 5-world financial plan that takes a lot of work and typically takes a team to pull off. Also, you can have belief and conviction around selling a life insurance policy to newlyweds too, because it's like, hey, if something happens to either one of you, you want to make sure that the remaining spouse isn't stuck with the mortgage they can't afford. So whatever that thing is, I believe it starts with belief and conviction. And then it should truly be a process that serves the person, that doesn't slam them into said product that you sell everybody. That's, I think, sometimes the gray area that we get caught in, because of course, financial advisors have to make a living too. And if you're not making sales, you're not converting, that's where the pressure comes in. But I'll borrow words from one of my good friends and strategic partners, Chris Smith. And it's the same way we approach our members at Triad. We're going to support our members more than they've ever been supported. And we're going to challenge them more than they've ever been challenged. And I think the best advisors that I see walk that line, because the truth is, if a prospect comes in and they're like, hey, Kyle, I know GameStop was the big one around COVID where, everybody was day trading GameStop. If they come in and they say, hey, Kyle, I want you to be my financial advisor. I want to put $500K in GameStop. A financial advisor sure can do that. But are you truly advising? And so what we do is we create a difference between what we call being a financial advisor and being a financial leader. And the truth is, a great leader sometimes tells you things you don't want to hear. A great coach, I know you've had some coaches in your baseball days. I know I've had some coaches in my football days. A great coach, just like a great parent, does not always say yes. Sometimes they challenge your thinking. Sometimes they create resistance. Sometimes they make you work your ass off harder than you thought you could. And I believe a great financial advisor sometimes has a lot of those same characteristics, where if they truly ask the right questions, you're here, point A, you want to get here, point B. Guess what? What gets you to point B is sometimes making the hard choices of not spending, of not throwing all your money in the hot stock of the day. That's the thing for me, is where you get that conviction that then leads to more sales and more conversions, is truly believing in what you're offering. And if you're not doing great planning or selling great products you truly believe in, it's really hard to get there. It's just that then you're the used car guy on the lot just trying to sell whatever inventory you have behind you. So I don't know, that's kind of high level how I look at it anyway.
No, I absolutely love that. I've said a couple of times, ETFs, equities, all of these things, everybody has access to the same ingredients. It really does come down to what recipe are you building with those ingredients, right? And so I love the idea of, do you have belief in the process that you're putting forth and the way that you can lead clients? Because that's going to allow you to have the conviction to transfer that belief. I think everybody believes you should invest, you should put your money to work, you should let your money work for you. So no matter who they go see, they're going to hear that. But to truly be great at sales, you should have belief in your process and why working with you is better than working with the person down the street. So I think that answer is great.
And can you communicate that in a way that they get it, Kyle? Part of being a great advisor is not talking at graduate PhD level, which unfortunately I've heard advisors that do with an acronym every other word. The best teachers take something super complicated and they break it down to the simplest core philosophies that are easy to understand at like a 5th grade level. If you're an advisor out there listening to this, big words, it's actually more of a defense mechanism that I've seen, Kyle, where it's like, I don't want to sound stupid, so I'll just say words they don't understand. Well, the best advisors I've ever dealt with, they explain it in a way my kids could understand it. And that's why they get all the wins. That's why everybody's like, oh, I've never heard it explained this way before. We should definitely do that. Proceed. That could be a whole nother probably episode if we wanted it to be.
Yeah. Oh, man. Yeah, we could keep talking for hours, but I've got just 2 questions left for you as we wrap up here. I think sales is hard work, and you mentioned growing up on a farm in Kansas. I know that's a big part of your story. This is a question I love to ask people, and I'd love your perspective on it. But farms are synonymous with hard work, and I think to be successful, success requires hard work, and I know you to be a very hard worker. But as everything is transferred to the knowledge economy, where a lot of what work looks like today is sitting in front of a computer, it's maybe making phone calls, it's things like that. I'd love for you to comment a little bit on what do you think hard work looks like today in the era of knowledge work? How can you be a hard worker?
One of my favorite books in the world, which is funny because this is a prime example. It wasn't even written. It's called The Almanac of Naval. A guy named Naval Ravikant, who I would call a mentor from afar. Follow him on Twitter if you're out on Twitter. So he founded Angel List. He's a startup and angel investor guy, but also just incredibly well-read, kind of a modern day stoic. But one of the things in that book, it talks about leverage, Kyle. And if you look at the history of leverage, and you've got to have leverage in any business of substance because it can't just be about Kyle or Brad. And so leverage back in the early days was people. So if you look at like the Egyptian empire and the pyramids, they had to go out, conquer other lands, enslave their people, bring them back. Then their leverage was slaves, basically, more people to build the stuff they wanted. And then money was invented and capital. And so now, we've talked a lot about how do you leverage that to get more? Well, you can invest it, all of those things. Well, now leverage is becoming technology. The fact that we can do this interview right now in 2 different states, we're using technology to leverage our time. We'll also, when we put this out on the internet, now the podcast, we're using technology to leverage the reach. So I think if you look through that lens of creating leverage, back in the day, hard work was physical, manual labor, people leverage. And so I did grow up on a farm. I threw square bales. For those that grew up on a farm, you'll know what that means. It's like they're not even square. Why do they call them square bales? But it sucked. And it was like, I remember throwing those in 100-degree heat in some hay shed with no ventilation, inhaling alfalfa. For those that understand alfalfa, probably nobody has a clue what I'm talking about right now. But literally, it was horrible. And my dad jokes with me, he's like, I saw at a young age, you were trying to figure out how the hell do I get out of here as quickly as possible. But I will say it makes knowledge work, even though it's a different type of calories burned. It's not the physical muscle building calories. But after a day of Zoom coaching calls, trust me, anybody that's done that, your brain is fried, right? So I think part of it was I looked at the evolution. I was like, how do I do less physical manual labor to get into knowledge? And I think it really ties back, Kyle, to answer your question. Well, if the world of ChatGPT and AI is kind of doing away with stuff that even a few years ago, I think would have been whole careers for people, how do I continue, if it's going to be a knowledge-based economy, to level up my knowledge? So I've got to invest in myself. And the cool thing is now YouTube, Audible, there's literally full-blown universities at people's fingertips if they want to do the work and increase their knowledge. I remember I read a book, The Compound Effect by Darren Hardy, still one of my favorites. And he said, based on the average commute, most Americans, if they use that time to learn as opposed to listen to music or talk radio, could have the equivalent of a PhD in a year and a half. It was like a year and a half or 2 years. I remember that stuck with me. And so, not that I love music. I love sports. Not that I don't occasionally veg out, but I have more times than not on that commute. Use that for podcast time, use that for audiobook time. So I think if we're going into a knowledge-based economy, I'd be thinking about how do I constantly upgrade my personal knowledge. And oftentimes, back to networking, knowledge is also connections. You don't have to be the library, you just have to be the librarian. So if in my network of Rolodex, I'll tell you what, if I've got somebody that hits me up and like, hey, I need to figure out how data connections work, going from an insurance company into a CRM, I'm gonna be like, let's call my buddy Kyle Van Pelt up and let's talk to him, because guess what? That's out of my wheelhouse, but all you have to do is know the guy or the girl that can unlock that knowledge base. So that's also one of my selfish hacks in networking, is it helps me better serve my clients, because now I've got more people that I can go to for said problems to find solutions.
I love that line. You don't have to be the library, you have to be the librarian, because now there's more information than ever at our fingertips, but you have to know how to find it, where to find it. And I think that's the hard work, is how do you sift through this enormous universe-sized library and find the things of value for people. So great insights. Final question as we wrap up. It's the name of your podcast. It's kind of a philosophy of your company, and it's something that you all do. So it's the phrase, do business, do life. Where did that come from? And for the audience listening, so give them a quick primer on what do business, do life means. And then how do they implement that as they take away from this podcast?
It's funny, Kyle, we just did a team breakout meeting on the Friday before the 4th of July. And it's funny, I shared this story and I had never shared it before, so funny timing. Do business, do life, it's Triad's mission statement. I'll just give you the short like how we define it, and then I'll speak to how it came to be. We believe in the and approach to life and business instead of the either or. We believe that all Triad partners, our team, our strategic partners, our advisors deserve to experience unlimited growth, freedom, and joy in their business and life. Together, we're changing an industry by building an intimate, highly curated community that redefines what a true partnership can mean. Together, we aspire to create life-changing experiences and champagne moments by challenging our members to think differently. So that's our official mission statement on how we define do business, do life at the Triad level. Selfishly, how it came to be, so I left my prior chapter in life. My last day was the day after my 40th birthday, so it was August 14, 2020. Incredibly grateful to that chapter. If it wasn't for that chapter, this chapter wouldn't be possible. I was there almost a decade and a half. Incredible friendships that I still have in that building, incredible friendships and the advisors I connected with during that phase of my life. Part of it was when COVID happened, Kyle, and I know we all experienced this, my normal, back to scratching a record, there was a massive scratch in everybody's record, right? It's like, in fact, the record stopped playing for a second, it just hit pause. And I remember that year, 2020, had that not happened, I would have had, I believe it was between 70 and 80 nights that were already spoken for, all the different events, everything that was already like blocked in. And for me, remember 13 to 7, so at the time, what would that have been, like 10 to 4? That was a sacrifice. That was a lot of nights away for family dinners. That was a lot of sports games missed. And I just remember looking at defining success. And I think a lot of people define success with the wrong equation. It's money and money in the bank. And I do believe that's part of it, because if you want to take care of those you love and create experiences for those you love, you have to have a tool to deploy that, and that's typically money in most of our scenarios. But I remember thinking the trade-off of time. And I was really fortunate, Kyle, because most of my clients were 20 years ahead of me. And I remember, it's cliche, they said, this goes, like as soon as I was a parent, they're like, this goes so fast, don't take it for granted. It'll be gone before you know it. And those it kind of echoed in my head, almost like this warning. I'd been pretty damn intentional to that point, but I remember thinking, man, at this point I had 8 summers left with Braun, my oldest. And it kept exponentially growing and stacking. And I just thought, man, I don't think this is the trade-off that I'm willing to make. And so do business, do life was just a different lens to look through. It was, what if I could build a business that integrates with life, not this work-life balance that I believe is kind of a lie that a lot of people tell themselves. I'm working so I can provide versus I'm working and providing and being there for the important things. It was actually in the foothills of the Smoky Mountains is the truth of where that was coined. It was my going away. It was my 40th birthday party. It was actually kind of a combo between an anniversary and a birthday that we did in July. And Sean, my business partner, was out there, and we had a friend named Justin, and we were hiking. And it was a couple's hike, the 6 of us. I remember somewhere in that conversation, we said, well, wouldn't you just want to do business with people you want to do life with? And that stuck with Sean and I. And then as we were forming Triad, we said, what if we form a business that not only helps our team do that, but our Triad members do that? Because the financial services industry is an industry of burnout. It's an industry of just grind, production, get recognized at some industry thing, and then divorce rates are higher, alcoholism's higher, because it's the medication that people do from burning out. And we said, if we can help people build a business they don't want to retire from, a business that blesses their life, that doesn't become their life, where they thought about it from the get-go, why does this business exist? To serve my family. We said, I think that'll resonate with the right people out there that we want to do business and do life with. I mean, I don't want to exaggerate. One of our members was like, man, you guys are creating a movement, not an FMO. And so when we start to hear how that's impacted in, almost 3 short years, a number of our members, and how it's really resonating, you heard part of that success story from the podcast with Anthony, another Triad member, Tom. He was legitimately setting records from a production standpoint. And his wife Shelly said, if Tom keeps running at this rate, he's going to kill himself. And so here we are a year later, and he's taken like month-long vacations in Florida at his second home, because we showed him a framework to create that space and empower others. And now his team has career tracks. And so I could go on and on because I'm super passionate about this, Kyle, but yeah, really do business, do life we're starting with the end in mind, and we're retrofitting it versus do business and hope I've got a little time left to do life on the other side. Yeah, it's kind of the origin story and how it's gotten to the point it is today.
Oh, man, I love it. I appreciate you sharing. I could talk to you for probably another hour and more, so we'll just have to have you back on at a different point as we're out of time today. But as we wrap up, I'm so thankful that you would join the show and come and share this experience and knowledge with our audience here at Connected. But before we wrap up, anything you want to shout out or anything you want to plug at the end of this year?
Kyle, I'd just say thank you. You've shown the spotlight on me during this interview, but I just want to say, as a guy that also does a podcast and does a lot of interviews, there's a lot of work that goes into it. So Those of you listening in, I think it's really apparent that Kyle and the team at Mile Marker care. Otherwise, they wouldn't invest their time, their money, their resources into doing conversations like this and putting it out to all of you. So just thanks for the work you're doing, Kyle. I've learned a lot from you when it comes to technology and finance, and thanks for having me on, man. I really appreciate it.
Absolutely, man. Thanks so much for joining. Well, everybody, this has been another episode of Connected. Thanks so much for joining us.